Tuesday. Hope you're having a great Tuesday, whoever you are, wherever you are. We're so glad that you've joined us today. If you are returning, welcome back. And if you're here for the very first time, let me extend a very special CFRN welcome to you. We're in our second decade of broadcast history, so I do hope you'll grab your day planner and pencil us in for the next decade. All right? Now, we're going to move a little bit quick today. Let me jump to the numbers straight away. I have a chart up of the S&P 500 Emini Futures. If by chance you can't see the chart, go to our homepage, cfrn.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered through the end of the month, one-click access every single day. Also, you can go to youtube.com/cfrn/live, bookmark that page, and you'll have one-click access every single day. Okay? All right. Let's look at the numbers from around the world. Now, these are the cash markets. We'll get to the futures in a bit, but right now we're talking about the cash. Here in the U.S., the color of the day, definitely green. The Dow is up 109 points, almost half of 1%. NASDAQ is up 8 points. S&P 500 up 8.5. Russell 2000 up almost a point, but still green. In the commodity basket, crude oil up 95 cents. Now that's 1.5%, trading 62.68 last. Gold down again today, $7.80. That's over half of 1%, trading 13.1260 last. As we move to the Asian markets, color of the day there, green. Nikkei finished up 135 points, a little over half of 1%. Shanghai was up 5 points at the bell, and Hang Seng up almost 112 points. Last but not least, the color of the day continues all across Europe, with the FTSE up 34 points, almost half. DAX up 18 points, and the CAC puts in a good showing, up 36 points, and that is over half of 1%. How about that Jamie Dimon? Now, what's Jamie saying today? Let me see if I can get his exact quote. You know, Lord knows I wouldn't want to misquote Mr. Dimon. It's all the news that claims to be news. I don't want to go there. I'll go there. Oh, and how about the New York Times? They came out with an article today that was not really Trump friendly, okay? But the headline was. So if things swing the other way, months from now on Meet the Press, they can show off that headline. Not the article, but just the headline. I'll show you that headline in a minute. Okay, JP Morgan Chief Executive Jamie Dimon regrets having called Bitcoin a fraud, but would still not be interested in the cryptocurrency, according to an interview on Fox Business. Now, the day he stood there in front of the cameras, called it a fraud, and tanked the markets for an hour, his employees, his traders, were on the bid, buying as much Bitcoin as they could possibly get their hands on. How can he talk out of both sides of his mouth like that? Maybe from a long line of a ventriloquist or something. Dimon, known for his candid comments, slammed the viability of Bitcoin in September. Currency isn't going to work. You can't have a business where people can invest a currency out of thin air, invent a currency out of thin air, and think the people who are buying it are really smart. Well, the smartest guys in the room, any room, are buying it. So the buzz generated by Dimon's comments spurred more interest in the alt currency. Bitcoin rose around 30% in 1 month following Dimon's speech, where he also compared the currency to tulip bulbs in a reference to the famous market bubble from the 1600s. Dimon's comments were followed by a more tempered view from his CFO, who said the bank was very open-minded to the potential use cases in the future for digital currencies that are properly controlled and regulated. So, Backstepping just a little bit there, Mr. Jamie Dimon. Go get him, Jamie. Jamie and his bank have paid more in fines than I believe any other bank in history. How about if we combined all the banks and all the fines? Ooh, what about that? Yeah, Jamie outstrips them all. I need to know that you guys can hear me for sure. Somebody give me a X or a check mark or a Y or something in the chat box, please. There we go. Because Michael just sent me a text that said test, and I don't... Let me tell him he passed the test, I guess. In fact, Michael, if you are ready, how about you pop in and give us a recap of everything that happened today in the live training room? Oh, I think he's having problems. Let me see if he's ready. If not, we'll shuffle on. Okay, Michael will be here in just 1 second. This S&P 500, wow. How about that S&P? Now, last night on the Concierge Trade Alert, let's just pull up that email, and I'll show it to you as soon as Michael's done, so you can take a snapshot if you want. The email last night said to consider buying 2751. Okay. And this is what that looked like. 2751. Okay. Now, this will make a great example. Buy 2751. Okay. Now, who knows where you put your stop? It's not a rhetorical question. Because from 2751, it ran all the way up to a high at 58.50, so 7.5 points. We'll take that. 7.5 times $50 per point per contract. Jones says 27.50. No. Anybody else want to have a go at it? This is really important. Part of learning how to trade. I know some of you know, and you're just like, I'm not going to play that game. It's like when the preacher at church, he goes, how many of you have done this? Or this? And it's like they're polar opposites, and nobody raises their hand for either one. Yeah, okay, Frederick nailed it. And Alex, okay. See that leg, retrace, leg, retrace, leg, retrace, leg. Now, before price broke through the alert at 27.51, the most recent swing low. Now, you don't want to put it, you don't want to like drag this up here and you don't want to get too tight, because it could come down, test that area, and spike it. Now, it could also come down and just keep falling, all right? That's why we use a stop, okay? So, the low of that candle was 46.50. So going with 48, that's a 1.5 below. It's probably going to be just fine in my thoughts. All right, and now here's the question. From 48. Oh, wait a minute. Did you say 48? Oh, no, I'm sorry. 48. Nah. That wasn't a winner. Okay, here's where you want to be. You want to be down here at 27.46. We'll go at 46, just to make a round number. Okay. From 46 to 51. 5 points, right? At $50 per point, that's a $250 stop loss, right? What's the maximum we risk on a Concierge Trade Alert? 300. I mean, there are extenuating circumstances, but by and large, rule of thumb, if we have to risk more than $300 per contract to take a trade, we'll just go look for a trade somewhere else or wait for another setup. Okay, so your stop's at 46. It's a 5-point stop at $50 per point, $250. And what did it do? It ran up and it ran back, and it ran up and it ran back, and then it ran. Okay, so even if you'd gotten out of 58, that would be 7 points. So you risked 5, made 7. Now you might say, you know what, I'm going to ride this out. Maybe you bring your stop up to here, or you bring your stop up to here. A lot of different ways to manage the trade, and these are things that we work on in the one-on-one mentoring and the workshops, that kind of thing. Now, I'll just go ahead and tell you, there's a weekly zone at 57.58. That's why price ran into a problem there. Okay. Now, when price pulled back here, why didn't it go back any further? I mean, what's going on here? Oh, what do you think? That's right. A weekly zone at 48.49. Now, on Thursday, I'll be putting those on the chart for everybody to see. But that's the anatomy of a Concierge Trade Alert. I mean, this could not have played out any better. Now, with your stop here, when this thing was, powering down, you got a little nervous, and it ran back up, and you're like, I'm one smart cookie. And then it powered back down, and you're like, oh, man, maybe I'm not so smart. Then it took off, and you knew you were a genius, okay? And your stop was never really threatened, okay? Hope that helps somebody. Michael P says, I've been using your weekly trading zones. Very good. I hope so. Now, some people do trade zone to zone. Others just use it as a backdrop to the trading that we do in the live training room every day. However you use them, it's entirely up to you. So, what time do you get in? Well, the alert says to consider buying 27.51 if you get the chance. So, you put in an order to buy on a stop at 27.51. Or you set a trigger bot. We don't really have bots in what we do. I don't know if there's bots in futures trading. I know it's a big thing in Forex. Michael, are you there, my friend? I guess he's not. He texted me that he was ready. His mic is messed up. He said, hang on. Okay. We'll do as we're told. Conspiracy theorists. What did you call it? You buy on a stop. Okay. As price is starting to make this leg up, and keep in mind, these are 30-minute candles. All right. As price is starting to work its way up. Now, hey, buddy. There you are.
There it is.
You can buy at 27.51, or maybe you want to wait and see how price reacts. In waiting, sometimes you'll miss the trade. No big deal. If you want to wait and see how it reacts, then you got to ask yourself, okay, now at what point do I pull the trigger? So, Michael, I was just showing on the S&P last night just a beautiful example. By 27.51, stop goes right here. That's a 5-point stop loss. So you're risking $250. And it ran up 7.5. And it could continue further. And in doing so, it went from zone to zone.
Yes. It had a zone.
Yep, there's a zone right there, there's a zone right up there. So it was support here as it powered down, support, and as it powered up, the next zone was resistance. And that's what we anticipate and expect. It doesn't always play out picture perfect like this, but the underlying principle in theory never changes. At least I've not seen it change since I've been in the markets, and as I look back historically, it doesn't appear to have ever changed. It's just how markets work. See, and when you learn how markets work, you can learn how to trade. If you learn some parlor trick, that's not going to help you. Should we put the buy or sell at one tick above or below the alert price? You can. You can, Frederick, because sometimes, in fact, often, numerous, I've seen it run up and touch the number, important price, important area, and run the other way. Because if you've got a buy on a stop at 27.51, if it touches 51, it's going to fail you. I mean, there may be some instances where it doesn't, but just assume if it touches 51, you're going to be filled. Okay? All right. So we've covered that. We've done the numbers. We talked about Jamie Dimon saying he was so sorry for the harsh words he said about Bitcoin. Now that he's had an opportunity, to buy some at a cheaper price, he'd be loving it. Michael, if you're ready.
I am ready.
Take the screens. We had no intro music today. We'll have no outro music today. The update on the radio server, every time, man, it does something to the audio driver. And I have to get my really smart guy from back east to remotely log in and fix it. So, as soon as we're done here, that's what he'll do. I mean, the server, it's fine. It's just the updates always mangle the audio settings for some reason. Yeah. Makes you feel violated.
Yes. Yes, violated. That's what it makes you feel.
Yeah. Yeah. And you laugh, but it ain't no joke.
It ain't no joke.
It ain't no joke.
Getting violated.
I got to go see a man about it, but I'll try to be here when you're done.
Okay. All right. I will try to make it last one Keurig cycle. Assuming the Keurig's already filled with water. All right. Excuse me. Okay. Good afternoon, everyone. Today is Tuesday, the 9th day. The 9th day of January 2018. It is also my daughter's 16th birthday. So shout out to my daughter. Even though I know she's at school right now. Let's see. Alright, if you have not taken a free trial with us, go to the home page here at CFRN.net. Right up here at the very top, it says sign up for the CFRN Live Training Room. 100% free trial. User indicators on our strategy. Click here. When you click there, a voice crack, you'll be sent to this page right here. Okay? When you get to this page, put in your email, put in your first name, and how you found us. Hit the submit button. Once you hit that submit button, you'll be sent to confirmation link. Okay? Click on that confirmation link, and you will be sent everything you need to get into our live training room. All right? All right. Here we go. If you're going to read the spreadsheet, you can read all the CFTC risk disclosure stuff down at the bottom. Today, as I just said, is the 9th day of January. We made 6 ticks in the euro and 13 ticks in gold. That put us at 167.50. Now, this morning it took 68 minutes and 3 trades to get to my goal for the day. At that point, we're up 107.50. And we took a total of 5 opportunities. So on the month and on the year now, we're at 656 and a quarter. That's over 6 days, averaging 109 per day. 109 per day. Okay? That's gross monthly profit so far. And I gotta fix the yearly stuff down at the bottom. Starting out a new year, it was messed up. Okay, so here we'll start out with the gold. And the very first one, well, we missed this one right here. And then we took 1 tick profit on the next one. And we took, I don't know what that number is. I think we took 8 ticks profit on this one. And then 5 ticks profit on this one. I think that's what that was. Because this put us up to +9. And actually 4 ticks profit on the last one. Because that put us to +13. Okay. Yeah, I had shown in the training room this morning how this could possibly be a trend change point, because it did not exceed the swing length, the leg length of the prior leg, and it certainly looks like that's what it was. Okay, and here now on the euro, you can see it was just not a good trending day today. The first one on the euro here, we had +6, and then we had a break even over here, and then we needed a lower swing. Okay, all right, on the crude, we didn't get anything on the crude during the room this morning. There was one short right there that would have been a break even, a long right here. Now this was at the end of the room. All this activity here on the crude was at the end of the room, so it was really during the break. So there was a long there, a long there, a long there, and a short there that did not continue the trend, and then it just started going sideways. Okay, so on the crude we had nothing. On the Russell, let's take a look here. Looks like we missed a few here on the Russell. One there, and one there that did not continue the trend. Changed directions, but it did not give any long trades. Changed directions again. Gave a short there, and a short there. And changed directions again, and gave a long there, and a long there that did not continue the trend. Okay, changed directions again, and gave a short right in there. And changed it again, and it gave a long there. Okay, and that was it. That was it for the Russell. The ES, as Dwayne already said, I'm sure it went from this zone up to the next zone, which is right up here. Put in a high of the day right up above that next zone. Okay, just right up above there. And did it give any trade setups on the way up there? No. Nope. Not a single trade setup. Okay. And that was it. That was it on the day, guys. We only had 5 opportunities that we actually took advantage of, and there were probably another 5 that we missed. So this is where we stand. 9th day of January, 2018. We made 6 ticks in the euro and 13 ticks in gold. That put us at 167.50. 167.50. Today it took 68 minutes and 3 trades to get to the goal for the day. At that point, we were up 107.50. 107.50. And we took a total of 5 opportunities today. All right, so on the year and on the month, we're at 656 and a quarter. That's over 6 days, averaging 109 per day. Again, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosure stuff down at the bottom. Now, this is supposed to be some of P there. Okay. So now we're going to put the right number of days down there. This is 6. Fixed. Okay. Again, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Okay. Now, if you have not taken a free trial with us, then just go to the home page here at cfrn.net, right up here at the top where it says click here. You should click there. That's going to bring you to this page. That's going to bring you to this page where all we ask for is your email, your first name, and how you found us. Click on submit. Once you hit submit, you'll be sent the confirmation link. You must click on the confirmation link. Something chaos, Bobsy. I don't remember the first word, but something chaos. All right, and that's it. With that, I'm gonna slide this over here so I can do things like check emails and stuff like that. And we can, if Dwayne is available, we can pass it back out to fabulous Phoenix, Arizona. Studio A overlooking South Mountain, America's largest city park. Dauntless Chaos, that's what it was. Dauntless. That was the name of our band. She is such a different kid now than that one. Ooh.
Sorry, there was a line.
Okay. That's all good. That's all right. You had a line at the Keurig.
Can you imagine walking into your kitchen one morning, there's a line of strangers, you know, lined up there in front of your Keurig machine?
Yes.
Starbucks
that would
was
be
crowded,
odd.
and we heard you had a Keurig, so we came over. Oh, well, here, let me print your card.
That would be odd.
Very odd.
Yes, indeed.
Okay, so tell me all about it. Recap the recap.
Today it took 68 minutes and 3 trades to get to 107.50.
Okay, 3 minutes, 68 trades. Wow, it's amazing that you're a high frequency trader.
That would be a lot of trading.
3 minutes, 68 trades.
68 minutes, 3 trades to get to 107.50. 107.50.
Stunning, stunning. It's almost as if you've done that before.
It's like I do it every day. Seems.
I mean, how long have you been doing this?
I don't know.
I mean, these indicators, this time frame, this little setup you got with the 5 steps.
Well, we are now in our 2nd decade.
Holy smokes! No way.
Yes.
Nobody
yes,
sticks
indeed.
around in this business that long.
Yes. Yes, we did. We have.
No, we did. Think about that, folks. We did. The first person that you signed up with to get some kind of learnings, teachings, whatever, are they still in business? Are they? I'm not speaking ill of anyone or any company or anything. I'm just saying there's a lot of coming and going in this industry, and trust me, no one is more surprised than me that we're in our 2nd decade of broadcast history. Trust me, it is not lost on me, that's for sure. The Curmudgeon Trading Group. Okay, thanks, Bob. Hey, I heard a guy last night on the radio say something about Bob's your uncle, and I thought, oh, he must not have made that up. Apparently that's like a thing. Okay. Okay, Joan said, so this is a trade you have to watch for, or you can pre-enter for the future. Well, you can, Joan, but I'm not crazy about the set it and forget it stuff. Let me get the charts back.
Okay, she said that 14 minutes ago when you were actually talking.
Yeah, no, I understand, but I'm just picking up where I left off.
Okay.
Because that's how I roll. See, Joan, Michael and I both, neither one, because we have experimented with that kind of stuff, you know, and we tried a thing or two with a thing or two. And the set it and forget it stuff, I don't know. It's probably fine for some people, and maybe some people do it with the alert, with the trade alerts. If there's anyone in here that does do that, like you just put the order in, go to bed, I'd love to hear from you, because most of the people I know that are successful, they're actually watching that thing. Okay, and so think about it. Let's say price is right here, and you go ahead and put in your order to buy on a stop. 30 minutes, an hour, 2 candles. Now it's 2 hours, 2 more candles. Now it's 3 hours, 3.5 hours till you can cash a nice check from the trade. Michael only trades for 2. See, that's how different this type of discretionary trading is from the rules-based trading that we teach every morning for 5 years, whatever, on the spreadsheet. You see the difference? See, we get in there in 2 hours, make our daily goal, and go. Poof. This is a whole nother animal. And Frederick says, check out Ether. You know, I read some good things about Ether today on a little place I like to call cryptodailyinfo.com. Yes. And if you stand by, my 150 megabit rocket ship internet connection will bring you the news. Here we go. There's Jamie with the big apology. Oh, I need to log out. Okay. There's Jamie saying he's sorry. Okay. I know I posted some Ethereum news this morning. Cryptocurrency hedge fund headed by ex-Goldman Sachs VP raises 140 million. That's a pretty big deal. Ethereum. Oh, check this out. Get ready for an explosion in Bitcoin as Wall Streeters spend their bonus checks. Ethereum co-creator Steven Nerioff says the cryptocurrency's value could triple in 2018. South Korean cryptocurrency mania. Exchanges are adding more employees than banks. Okay, now you can dig down. There's a whole lot more news. There was a ton of news this morning. But let's go to the charts. And don't forget, guys, those forums are there for you to chit-chat with people all over the world about your favorite crypto. Okay, yesterday I couldn't bring Ethereum up. And that had never happened before. I got a feeling it ain't coming up today either. Wonder if they changed the format. They changed the format, or it's just not there. What is this? Let's go take a look at this and see what I did. Okay. Oh, they took Ether back to the mothership. Okay, I'm gonna have to call them about that, because that wasn't our deal. We had no such deal. I'm gonna have to go somewhere else to get this. All right. Publicly shamed. Can a brother get a chart? Probably. Whoa. Up 11% on the day, or on the session. $1,203. Huh. You see that, Mike? Oh, Mikey. Hey, guys, always on the phone. 24-hour high, 1248. 24-hour low. Look at that price swing. Imagine if you owned a stock that swung that much. 24-hour volume, 3.2 billion. Market cap, 116 billion. And what's the deal with all these websites now suddenly telling us that they use cookies? And we have to say okay, or we'll keep getting that little pop-up. Is that like a new law or something? Because if it is, I missed it. Okay. Let me see if Joan says it's a new law. Huh? Well, we got to get that on our sites. Oh, snap. Hey, Mike, are you there? That guy. Hang on one second. One second. Yeah, never mind. John. There's John. John, welcome to the show. You have an open mic.
Hi there. How are you doing?
Very good. Good to have you with us. Thanks for... we're kind of a little bit rushed today, so I appreciate you being able to come early. Thank you so much.
Yeah, no, that's okay. The thing about the cookies, it might be something to do with that change of, the internet a few weeks ago. That new, where the FCC voted to change the way the net is...
You talking about net neutrality?
Yeah, it might be something to do with that. So, because it seems it's almost since then that thing has started to pop up.
Yeah. Did you see Jamie Dimon out on his apology tour this morning?
Yeah, I did. Yeah.
Did you catch the New York Times headline?
No.
New York Times headline. Trump. I saw it on another device, but here's my thought. The headline, for the New York Times, where can I find that? Okay, this might be it. Oh. Okay. Let me just go to where I originally saw it and pull it up on my phone. Sometimes you just... Yep, right there. The decline of anti-Trumpism. It's a headline in the New York Times. And so you think, as you start to read the article, that this is where the New York Times is going to roll over and go, maybe we got it wrong, maybe he's not such a bad guy. Yeah, they didn't quite go that far. Now, let me start with 3 inconvenient observations based on dozens of conversations around Washington over the past year. First, people who go into the White House to have a meeting with Trump usually leave pleasantly surprised. They find that Trump is not the raving madman they expected from his tweet storms or media coverage. They generally say he is affable if repetitive, he runs a normal, good meeting, and seems well informed enough to get by. And then it starts to go downhill real fast about what all the people say who work in the White House, who are part of the Trump administration. So it's another attack on him, but disguised under a friendly headline, something we've been talking about on the show, the decline of anti-Trumpism. So 3 months from now, someone from the New York Times can go on Meet the Press and go, well, yeah, we knew it. We knew that. See the headline? Oh, no, you can't read the article, but just look at the headline. So anyway.
Yeah, it's like this Michael Wolff about 15 months ago, just right after the election, was saying what an incredible guy Trump was, brilliant, etc., etc. And now he's, out there just saying the exact opposite. It's just it's an absolute outrage. It's a disgrace. And this is how he weaseled his way into the White House, because he came out with a couple of articles praising Trump, and of course they fell for it. And now they're ruining the day they allowed that guy to even, get near the place. So it's unfortunate.
Ethereum is up over $1,200 today.
Say that again?
Ethereum is up, trading at 1248.
Higher than 1,200. Yeah, no, it's a big deal.
It is.
the Bitcoin is not is kind of losing out.
It's losing some steam. It is. Yeah.
Ethereum pulling ahead. The thing about the market, which is now up for the 6th day in a row, what's probably puzzling a lot of people is why it keeps going up. And the reason is, I was watching a thing flash by this morning, and some outfit that's overseas is going to get 6 cents better than the tax is worth 6 cents better, earnings wise, to that company. So that's, you got to multiply that across the universe of companies, and that's what's going on. People are adjusting their, it's almost like the earnings came out already, and they're much higher than expected. And so it's a very, very powerful thing. I mean, it's never happened before, and it's actually potentially more powerful than the 86, 87 scenario, because it's a corporate tax cut. It is the biggest tax cut ever. There's never been a tax cut in half in history like this one. So that's a really monumental deal, and that's why this market is so uber powerful right now. And if you remember 20-something points ago, 25 points ago actually, I said XIV, when it breaks out over at 120, could go the same way as Nvidia, and so far it's well on its way. It's up 25 points, $25 since I recommended it, or since I outlined the thing, and it's probably going to go higher, just like Nvidia did, because when these things, when stocks get over $1, they have a habit of going to 200 and 300, just like Boeing and Johnson & Johnson and other companies have. So this is an incredibly powerful situation, the likes of which we've never seen before. And today, yesterday the farmers started taking off. We actually got a buy signal on Guild the first day of the year. I think we mentioned it on the show, and it's up about $6 since the beginning of the year now, which is quite a big deal. It's up to almost 10%. The bonds are also tanking, which this time they're closer to probably breaking 150 than they have been in the past, and the bonds, that's a good thing, because as I was saying, in spite of the snow and the weather and everything else, January may be stronger than expected based on what's going on with these bonds. Also, apparently there's never been a year where the optimism indicators were as high, or behaved as strongly as they have over the past year. They mentioned, I don't know whether you heard this on the news, but apparently it's colder on Earth today in a lot of places in the northern US than it is on Mars. And I thought about that, and I thought, that's a pretty big deal, because for those who don't know, Mars we're 93 million miles from the sun, 93 million. And Mars is 141.6 million miles from the sun. It's a year's travel away from where we are, and Mars is 34 million miles away from Earth. So when you think that it's colder on Earth than it is on Mars, I mean, all this baloney about global warming is just out the window. I mean, it really is, because there's something going on here that's definitely the beginning of some sort of an anomaly. And maybe it is going to be hotter in the summers. I mean, the next summer we have is going to be the test of whether we're really going into some sort of an ice age or not. I think if the next summer is distinctly lower in temperature than the last one, it could be a pretty good indication that this global warming really is a maybe behind us, at least for a period. and it will be one more vindication for Trump if that happens. So, but the fact, I mean, look, how many times we say it on this show before, back in October, November, we mentioned it a number of times. We're going to have the coldest winter ever, or at least in 100 years. And we've broken all kinds of records this winter. And look, the sea froze. Do you know the sea froze in Massachusetts? I mean, come on.
The sea froze. No.
Yeah. No, it really did.
I believe it.
Yeah, incredible. You remember a few years ago that, where they do the crab fishing from in Alaska?
Right.
That, I think it's Drake's Bay or something like that. Drake's Bay, maybe. That froze over completely as well. And, you get Niagara Falls, the Great Lakes freezing over. I mean, these are really, really... And look, we're still in January. We're only in early January. So, we could be, if this continues, we get some more Arctic blasts, we could have a really, really, really cold, even, I mean, sometimes, remember last year we got some cold snaps as late as April. So we could be in for some brutal cold still to come.
I heard someone, I know that you and I have talked about, the word is it's going to be a severe winter, right?
Yeah.
I heard some weatherman the other night say, based on, I forget what he said, that we should have a mild winter. He didn't go into any detail at all. He didn't explain himself. I think he might have just read the teleprompter wrong. I don't know.
Well, this ain't no mild winter, that's for sure.
I mean, my goodness, look at what's already happened. You're right. I mean, the proof's in that right there. So.
Yeah. And the funny thing is, that's Reno and in Klein Village, I have a friend there, and they had 900 inches of snow last year, and this year they're begging for snow. So it's it's kind of weird. They're not getting what they had last year in terms of snow, even though they had a couple of early snowfalls. So, well, unless they come out with some sort of news today from this meeting that they're going to shut down the government, it looks like this market is probably going to, maybe go even higher than where it is right now. And you can't argue with this. I mean, this first 5 days of the year indicator is a pretty reliable deal, and it's now 6 days, so it's pretty bullish. It's pretty bullish, and
incredibly bullish.
Yeah.
That article I was talking to you about yesterday finally came out. Millennials adopt crypto lifestyle at rapid pace.
Meaning?
Well, I read it to you yesterday that the millennials, that's the 18 to 34 age group, account for 30 to 40% of all cryptocurrency that has been purchased so far. People in that age group, the millennials, are investing up to $21 billion a day in cryptocurrency.
Well,
so I go into talking later in the article about the wealth inequality thing that everyone's always complaining about. He's got more than I do, kind of thing.
Mm-hmm.
And it's almost always the old white guy that they're complaining has all the money. Well, if this cryptocurrency thing continues to power forward, well, that could change. It might not be the old white guy; it might be the young any guy.
Well, that's a good point. It's a good point, because I was just about to say, you get these fellas like Harry Dent, who has made some good calls in his time, but more recently he's certainly been dead wrong on gold in the last few weeks, and likely to be proven more wrong in the future. He's the guy who originally called for down 30,000. That never happened. That was back in 2000, and then right before a big crash. And I think he's recently been very bearish on the stock market as well, like a lot of these other guys. And one of their reasons was because they were saying that the baby boom generation is getting older, and they're not buyers of the market anymore. They're sellers of the market and this sort of thing, which is potentially true. But they forget that the next generation, the echo boomers and the millennials, are a much bigger part of the economy today than the baby boomers are, and they're forgetting about the up and coming generation. And actually, the millennials, when Mexico went through its boom last decade, right? Because it's a different demographic than the U.S. It's a younger demographic. One of the reasons why they went through this incredible boom. Remember, their stock market went up about sevenfold in the 2000s. And Brazil as well, is because the echo boomers or the 18 to 34-year-olds or 45-year-olds, all these people who are buying houses and buying things, were pushing the economy higher. So we're actually getting, the new generation of home buyers, and the millenniums are now coming into that age where they're going to become a bigger force in the future, from being 18 to 34 to, the next group of maybe the 30 to 50, 30 to 45-year-old, 30 to 50-year-olds that are still to come. So, and this is a huge part of the demographic now. So it's a really, really big deal, for the future of America. And a lot of these guys are very smart, coders and people like that, people working in Silicon Valley who are earning fortunes. And, they're very driven people, this new demographic. They're not as lazy as people. They're actually quite financially smart, a lot of these millennials, and some of them are doing incredibly well. So there's a lot of entrepreneurial spirit. As you see a lot of these very, very successful companies being run by millennials. They're run by very young guys who are very bright.
That's right. Yep.
Most of the guys who come on Shark Tank, are in that bracket, and some of them are incredibly impressive. And then they say, well, tell us how much you sell. We did about 3 million already. We only just got started.
No, it's unbelievable, right?
Exactly. And you can multiply that, exponentially in every nook and cranny and neighborhood around the country. So that's why it's a great time to be alive, because this entrepreneurial spirit, when the economy is this strong and vibrant, it sort of creates entrepreneurs,
Yeah, I mean, this S&P, we're almost at the highest weekly trading zone. Well, no, we got another 20 points before we top out. But this morning it pulled back to a zone, it hit a zone, we got one more zone, 20 points overhead. When does this thing take a real breather? Is there some event,
good point.
Is there some event you see in the future that might trigger?
Well, if they storm out of the White House today with grim-looking faces, that might set it off. Because if there's a hint that the government does a shutdown, you could actually see a pretty swift sell-off. And I was looking at, there was some very interesting stuff came out yesterday from someone showing, this guy wrote about the 2010 flash crash, which sort of came out of nowhere. And, look, one of the things that is fairly normal is when you get a very big up year like this, there is a bit of a test, of the previous year's higher levels. Just like there is when you go into an hourly or a daily, you have a strong daily move. Sometimes the market pulls back before it goes higher. If you look at GILD, that's exactly what happened off the first day of the year. You had a strong first day, went up a little bit more, then came back, tested about 50% of the move, and then it shot up to where it is right now. So, the fact that this market could potentially test right back to maybe where the tax cut was, enabled, that would be, you know, probably 1,000, 1,500 point drop in the Dow. Could happen out of nowhere, and you know, we could have some sort of a black swan thing come out of nowhere that might provoke that. The you know, another Brian Ross event is potentially on the cards. Remember several months ago, I referred to the transports that had about a 700 or 800 point drop, and that's the equivalent of was the equivalent of about 2,400, 2,500 Dow points. Well, we never got that Dow. You know, we never got that pullback in the Dow, but and then the transports started out, you know, rallying off that pullback, and we just hit an all-time high today, again, on the transports. So you know, we're and because we hit an all-time high in the Dow and the transports, actually there's a little bit of divergence going on here, because on Sunday night we hit 25,390, I think, on the Dow, on the Dow futures, and then we had this big pullback yesterday. So it's actually only just coming back to a kind of a double top right now against that. And the transports, I think, actually may not have hit a new all-time high today. They might have just, they possibly did. But, you know, where you sort of don't get confirmation of one or the other on the transports and the Dow, that could lead to a problem. But the other thing is, in this article, it showed you know, these previous crashes, and as we pointed out, in the late 90s, you know, that the advanced decline line peaked almost 2 years before the top in 2000. You know, the advanced decline line just made an all-time high here in the last few days, and has been making, you know, new all-time record highs every day since it broke out of that. You know, the last time I remember looking at that was with Garrett, where we talked about it was in a bit of a pullback before, you know, back in October, and then it broke out, and it's been unstoppable since. You know, you just can't have a market top when the advanced decline is that strong. And by previous measures, including 1929, it sort of suggests we're at least a year from a top right now. How about that? And it could be, so we could be 1 to 2 years from a market top right here today, based on how strong the advanced decline line is. And as I've said to you on this show, listen, how long was it ago? It was probably a year ago. I said this is the strongest market in history, and that was a year ago. Now it's indisputable. You know, this is absolutely.
Is that something you really keep an eye on, the advanced decline line?
I do. Yeah.
Okay.
Yeah.
And maybe just you can give us a thumbnail sketch of how you use it, how you view it, the importance it holds.
Well, I think you know, I always go back to the there was the 6 guys, Robert Prechter, Ross Perot, Michael Metz, Dale, oh God, I can't remember her name now, and Joe Granfield, and a couple of others. I think it was Darryl somebody, this analyst. He was well-known female analyst. And look, the Dow closed every year up every year during the 90s. And these 6 people were convincing themselves that we were we're going to crash next week, and we were going to, you know, go into a bear market. In other words, they were fighting the bull market all the way up, just like a lot of people have been fighting this bull market, you know, up until the last year or the last few months, because now they're sort of throwing in the towel on the bull side, right? So you don't hear too many people. I mean, remember,
which is an indicator in and of itself that it's about ready to turn.
Well, not necessarily, but it's certainly more of a warning sign. But you certainly have to be careful when that happens. I remember, look, 3 or 4 months ago, somebody came out and said, "I'm sure," they put $50 million shorting the financial sector, right?
Mm-hmm.
And some other guy put about 5 million on the VIX or something, and I told him, I actually came out the next day and said, somebody just blew a good part of their 50 million bet, because it's not going to happen. I mean, it's plain and simple. And go back and look at where the FAS was 3 months ago, and look at where it is today, and you get the gist of what of how much it's gone up. So the thing about the 90s, in the late 90s, the advanced decline line did not act. In fact, for most of the 90s, the advanced decline line was not making new all-time highs or new highs all the time. It was different. It was a very different kind of a deal than what's going on today, which is why this is the real deal, and it's much more powerful than the 90s. Especially, I mean, look, the mid cap is making new highs, up until yesterday. That's just unheard of in a bull. I mean, remember what I said. This is actually what we're looking at today. We're back to Bastille Day of July the 14th. That was the previous most powerful event that happened in the market, when about 12 major indices were all hitting new highs. It was like a V12, finely tuned and full.
Right.
Right. You know what? We're kind of back there again. This is the same thing all over again, except it's not one day; it's multiple days. So we're in a much more powerful market today than we were 6 months ago. How about that?
Well, yeah, but how long can it continue? And I guess the answer is as long as it continues.
Yeah, and the thing is that it's very, very powerful, because this tax cut has just, it's almost, I mean, it's hard to imagine, but we've gone from a 25 multiple to a 13 multiple overnight. Literally, that's what's going on here. And that's why people, the big money is going out and they're buying. Look, the S&P's at 20, actually very smart guys. About 3 or 4 days ago, they went out and bought 2750 call options on the S&P. We're at 2757 right now. So what kind of a trade? They
Nice.
probably doubled their money in about 3 days, these guys.
Very nice.
And some people are buying 3,000 calls right now on the S&P, or various options.
Yeah.
They really are. Yep. I mean, we only have to go up 26% to hit my upper range of 32,000 on the Dow. We're going to have to go up 26% this year. And we went up 36% last year. So is it within the realms of possibilities? Absolutely it is. I mean, remember, this is, I mean, just like this discussion we had yesterday, where people are saying, I'm not seeing the economy yet, because justifiably, arguably, there are a lot of people who are left behind. We're not seeing, a real true boom just yet. But I think later on this year, you might start to see that. You might, this economy could really be on fire in a few months' time. It could really be quite something. And where you have just for hire signs all over, they just can't get people. And they have for hire signs in almost every business, trying to keep up with demand, and that's when the wages will finally start to rise, because people will have to pay more to get help.
We had an article this morning in South Korea. Their crypto exchanges are adding some phenomenal number of employees. I mean, just trying to keep up with demand.
Yeah.
Amazing.
It is, and anyhow, look, in spite of if we do get some kind of a discord here in the next day or two over the wall and the dreamers and things, that could actually hit the market pretty hard and pretty fast. I mean, remember, the Brian Ross thing came out of nowhere, and that was 350 points down in a matter of what, 15-20 minutes or so, or half an hour.
Yeah.
So we could get another one of those at any time. it could happen overnight. I mean, something bad could happen overnight. And you come in the next morning, and it's a complete reverse of what's going on right now. If we keep going at this rate, we just equaled the fastest rise of 1,000 points in 23 days. But at the rate we're going right now, we could get there in another week or two to 26,000.
The last 1,000 points that we climbed, they said it was the shortest time in history that it took to go 1,000 points.
Right.
How much time was that?
About 23 days.
23 days, okay.
So, and look, I mean, it's unreal. I've never seen the Dow go up this much off a big number without a pullback. It's normally you actually 25 350 was our kind of a target before we got a pullback. We did a little bit of pullback this morning, but it kind of marched on. It's pretty unusual to go up, 400, almost 400 points off a big number.
Good Lord, look at crude.
Yeah, it's big. It's crude is another.
Goodness.
Yeah, yeah.
Yeah,
the oil stocks have been forecasting this for the last few days. They've been very strong. For the 3 days in a row, they've been up, and now you're seeing they're leading the crude higher. Look at the gasoline. Even the gasoline is right back up there again. This is amazing.
62.30, and we ran up to 63. 62.30 to 63.
The Brent crude is probably about 68 right now, which is really a pretty high price.
We do the WTI, so that's a $700 per contract move. 62.30. Yep, that's right. $700 per contract move. Wow. What is this? Iran?
Probably has a bit to do with it. Yeah. Because when Iran came back on after the sanctions were lifted, that really knocked the heck out of the oil. Knocked $10 off the price or more. So any kind of that's another thing. If war breaks out in the Middle East, which it could, that could be something that could shock the market. And next thing you know, really at the rate we're going, 65, 70, 75, these are three big numbers still to come. And if we get above 77, it's telling us that we're going to probably get up to 90. So and look, we've never I don't think. Remember, we actually talked about this about 6 months ago, or actually when Ed was on one day, we talked about how the preponderance of we're going into an era of deficits, of inventory declines or inventory deficits, and we've had 7 in a row now, and big ones, not just a million barrels, but between 4 and 7 million barrels over the past 7 weeks. I don't think that's ever happened before, ever in history. That's a really, really big deal, and it looks like there's going to be another one this week.
Wow.
Yeah.
There's going to be a drop. There's going to be did the ADP numbers come
we've
out
had
yet?
We've had 7 inventory drawdowns in a row so far.
Is that a first?
Who'd have thought? It absolutely has to be. Yeah, it has to be. Yeah.
So who's colluding against us? What's the conspiracy there?
Well, they probably figured that we're producing more, so they may have planned the imports to be less, and they might have been caught short, I would say, is probably what happened.
You see how far these bonds dropped today?
Yeah, I talked about that a minute ago. It looks like it's going to break. it's going to break the 150, and you know, that could be something that could rattle the markets as well. You know, if we start breaking sharply through the 150, that may actually hurt everything, you know, and it could cause you know, some sort of a setback.
Our alert last night was to sell 150, 114.
Yeah, I know, it was a good trade.
Triggered
Good
and
trade.
gave up 7 points. Then it went back up and triggered again. Important prices, important areas, almost always tested. And
yeah, it looks like the gold is turning here. I'd probably be looking to pick up the gold here, gold and
here's
silver
gold right
on
here.
this paper. Yeah.
Last night on gold, we said to consider selling 1317, and it dropped 300. And then there was a pretty good little pullback. So if someone was trailing that real close, then that would be, you know, part of that would be all you got. If you kept your stop up in its original place, then there was a shot at 700 per contract. But we never get out at the swing high or swing low because we always trail our stops. So yeah, gold could be turning up. Where do we expect it to run into some difficulty? Well, if you look at this low, and this high, we're in the 1316 to 1317 area, right where we sold it last night. So if we get back over that 17 and it doesn't trigger again to the downside, we need to take out these highs right here. And
I think there's you know, there's a potential strong rebound ahead on the gold. Look, there could be one more test. Right now, we've come back and tested the 1309 that we tested a few days ago. So there's a potential double bottom developing here. But if we break this 1309, then maybe we're going to test the 1300, possibly even a bit lower. So
this is that monthly chart we did the other day. We put together.
Yeah.
So, I mean, you don't have to look at a monthly chart every day, guys, but it's nice to know where it's at. It's nice to know where the weekly's at. Nice to know where the daily's at. But a daily chart, you don't have to look at it really more than once a day, because if you're looking at smaller time frames to actually put on and take off your trades, well, you know if it's up or down on the day. So anyway, anything else you want to cover, John?
No, listen, thanks for the invite. Just keep in mind that the pharmaceuticals are really, really strong today. And they're coming off a pretty beaten up year, if you like, or last few months. And the LABU, which we think we put a buyout on that around the 70, 78 or somewhere. It's 83 right now. It's looking very strong. And the Guild just made a new high a minute ago. And so you know, this is another reason why the Nasdaq is so strong today.
Guild is Gilead, right?
Right, correct.
Okay. I got you. All right, John. Well, listen, thank you so much, and we'll catch you tomorrow.
Okay, much obliged. Thanks.
Bye-bye. Okay, guys, let me give you another chance to grab the screenshot if you want. As you saw, there was a $1,000 move in bonds, $700 move in gold, $700 move in crude. So if you want to snap that. Now, if you're on the trial and you become a partner, I think Michael has worked some Concierge Trade Alerts into the bonus if you become a partner this week. Also, if you would like to simply become a Concierge Trade Alert client, then go to emini.cfrn.net. At the top of the page, you'll see a baseball player, and right above him it says, if you want to take the Concierge Trade Alert trial, it costs $1. And at the end of 5 trading days, we stop sending you the alerts. It doesn't roll over into an automatic subscription. Okay? So you can try it before you buy it. See if it works for you. You get a couple of training videos. You can have a one-on-one mentoring session if you like. And then at the end of the 5 days, you decide whether or not it's something that's going to work for you. And then if you want to become a subscriber, you have to contact us. It just doesn't automatically happen. All right. Hopefully tomorrow we'll have the intro and outro all fixed up. My guy, you gotta have a guy for everything. My sound guy should be able to take care of it today, I hope. And I want to thank each and every one of you for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.